Peter McGuire, Chief Executive Officer at XM Australia, joins us in our studios. This is a special interaction and a rare one at that. Peter, it's great to have you on the show. Thanks very much for taking out the time.
Thank you.
As my colleague highlighted, Mubina, she says a lot rests on the G20 summit.
Absolutely.
In terms of getting a breakthrough, will it happen?
I tell you what, when you think about what happened in Papua New Guinea only a couple of weeks ago, and it was a very frosty response between Michael Pence and Xi, I feel as though that now they're sending in, the chief general of the pack, which is Trump, and it's going to be fascinating how the body language is going to be interpreted. The next part, of course, is, are China and President Trump going to be able to put together a deal? The jury's out at the moment, though we do know that President Trump overnight has said that if there is no deal, certainly we're going to ramp up tariffs.
Yeah,
that's a scare tactic. Now, remembering he's a deal maker, and deal makers always go heavy at first and then come back and they say, well, right, we wanted 80%, but we settled for 60. So it's going to be fascinating how it plays out. They're the group dynamics at the moment. And one thing for sure, everyone knows, we're 2 years into a term, very, very hard man to decipher his next actions. No one knows what President Trump can do, will do, or may do.
Yeah, we're only hopeful that if you could call it truce with Kim Jong-un, I'm just a little hopeful that things would proceed on China as well. But how much of it is just trade tensions between US and China, and how much of the metal weakness would you also attribute to the fact that China macros itself are slowing down?
Absolutely. Look at the stock market. It's down over 25% this year. It's been a wipeout. Went in volatility. 2018 has been an enormously volatile year. We've seen huge sell-offs across different asset classes. Have a look at some of those base metals. We're just smashed to the downside. Then we've seen crude in the last 2 months smashed to the downside. Also, the Chinese stock market, cryptos have been hit very, very incredibly hard. So I think it's going to lead into 2019 as being it's going to be a ramp up on volatility. And that's where traders need to be conscious of, because there are so many moving parts. You've got a president now saying, no, he's not interested in what Jerome Powell's prepared to do. We certainly don't need 3 rate rises next year. The Fed has a certain lens and that wants to go back to a normal range. And then you've got a president saying, if I can contain inflation, and that's his first move, and he's done it so well, to hit the Saudis and hit OPEC, then his next pathway forward is going to be he doesn't want a strong US dollar because of the trade issues there. And have a look at the rupee here. So all of those impacts are greatly affecting his identity and what he wants to achieve for the global market.
Well, we are taking a leaf from that episode. It's now like the government versus the central bank, and I think that's a narrative which is being seen across the world. But keeping that aside, do you believe that the rally that we witnessed in global commodities through 2017, a bit of 2016, that's likely to be challenged? 2018 has been a rough year. 2019 will be even rougher for commodities across the board, including crude, of course.
I would say so. I mean, the only thing that's going to really pull it out and create some mayhem is going to be a geopolitical issue as far as war or something like that, or a weather outage or something really coming out of left field. Now, it does happen sometimes, and I'm not calling for that or suggesting that's going to happen, but the momentum at the moment has certainly been weaker, and we've had a very strong, really, from 14 to 15 to 16 move to the upside. A lot of these metals have been oversold, and possibly it's a great time. I notice the inventory levels in China are at very, very low records and low numbers. So that's not a bad time to restock when you've got cheaper prices, and that may be an initiative that the Chinese government's going to play to. And the next side of it is whether this upcoming OPEC meeting there's going to be a consolidation amongst their players and all of those different actors to try and create a stronger pathway and push forward to get a stronger price. But there are so many different components of that equation that need to be considered, and only time will tell. But the big thing this week is certainly going to be Buenos Aires.
Yeah, it's going to be. But talking about the OPEC meet, which way do you think is headed? I mean, what could be the new real for oil? We've heard everywhere to $100 when it touched 80,
that was only in
and now
September.
Cool to 60,
Yeah, that was 2 months ago. And all the big guys were saying, the big investment banks, oh yeah, it's an $85 to $100 play. Maybe we'll hit 105.
Would you blame them? Because it's an over-emotional market. I remember having this conversation with Howard Marks. This was when crude was crashing in February of 2016.
Yep.
And he says, look, it's the most tough market to call because it's so emotional on either side.
Well, that's right, and you've got all those, as far as, you know, the large hedge funds and traders that have been, you know, enjoying this time. The last 6 or 7 weeks, they would be rubbing their hands with glee as far as what the profitability has been.
Yeah, exactly.
25 to 30% profit to the downside. Now, these guys exit positions quickly. They see momentum and then they stack positions and short a market.
Sure.
And it's been almighty what the profitability has been.
Yeah.
So I don't think the volatility is going away, and I think there's further softness to the downside over the next week leading up to the OPEC meeting. I wouldn't be surprised to take a 46, 47 handle for WTI, probably 57 to 58 for Brent, because we saw Friday night it was hit 8% to the downside, smacked. And I feel as though that you're going to see further softness. Saw a strong market overnight in the US. Dow was up, S&P up, bid up very strongly, and Nasdaq made a very strong comeback. But crude came off.
My only follow-up, Aisha, if I can just take one more question on oil, is can we revisit the Feb 2016 lows? Because we're talking about a twin peak when it comes to global supply and demand in oil, right, at 100 million barrels per day. If China's likely to slow down, if global growth numbers are being revised lower by the IMF, and because the market is so sentimentally driven.
And you've got record production.
And you've got record production, yes. So with the Iran sanctions getting diluted.
Yeah.
Do you think that scenario could play out? Is there that much of a risk?
Yes, it can. First answer, yes, it can play out. It can certainly repeat itself. But I don't think that those global dynamics at the present time, unless you had something dramatic happen, that, you know, crude prices are going to fall an extra, you know, 25% from here, 30% from here, which you would have to see for those numbers to be repeated.
Sure.
But history does some strange things. And I remember distinctly, I was in New York about the 3rd of July in 2008, speaking at the NYMEX, and it hit 147 that week.
Ouch.
And ouch. Yeah. And then 13 weeks later, it's $33. And no one in their right mind, if you said that on 13 weeks' time it's going to crash from 147 to 33, they would have said you need to go to the asylum. Well, it happened. So I'm not going to say it won't happen this time, that we're going to see a pullback, but there again, I think the big one this time is that I still think that Saudi Aramco IPO will be played out. I reckon that they'll come to market in 2020, 2019, and they want to see a higher price.
Oh, okay.
Oh, so there is a possibility that after this bout of softness, we could get back to the elevated levels also on crude.
I think you'll go up, you know, up another 10, 15% from here as far as consolidation in that first quarter.
Because they want $80. They've said that. Yeah.
Of course, they would. They'd like 180. They've got a lot of palaces to build. They've got a lot of, you know, a lot of Bugattis to buy, and a lot of, you know, they've got a budget deficit. The Saudis have really been hit hard, and they need to see higher prices. But you've now got the crude market being satisfied from the US, and they'll end up being the largest producer in the world. Who would have imagined that 7 or 8 years ago? You would have laughed at it. But new technology, innovation, and the way they've been able to retrieve crude or shale has been revolutionary.
Yeah, absolutely. We got a little emotional about crude, as is always the case, but let's get back to metals.
Yes. It's great news for India, right? We're happy, yeah.
So, what about metals? Do you see the softness continue, or are we likely in for a rebound? Or you think all depends on what comes out of G20?
The G20 plays a part. I mean, you wouldn't, you know, any market that suffers bear market territory and that big sell-off since mid-year is a wake-up call. And it just seems to be, and you know, one thing about trading is you've got to be a brave person to go the other way when everyone's been short. And at the present, it looks like, you know, the shorts are remaining. You see those numbers coming out of the LME, you see global consumption, and you look at the demand picture and go, hey, it seems to be, you know, a one-way ticket at the moment, and that's in tandem with crude. So when they both turn, but the other trade-off, of course, is that stronger US dollar. Don't take anything away from that. You know, at the start of the year, we were at 88, 89 to the US dollar index. And now we're back at that 96, approaching 97 level. And with a Fed rate rise probably on the cards, I mean, that's, you know, it's a 95% probability or higher that that's going to be, you know, in the market within the next couple of weeks. So that unless you saw something dramatic on a world stage, let's see what happens this week in Buenos Aires. If there is no deal, then it's game on, and you're going to see huge volatility spikes.
And so how much downside would you give to the main metals in aluminium, zinc, copper? I'm not including steel as of now, because the talk on the street is China needs to defend 6%. Their last print was low. Their business activity has been slowing. PMIs have, as you pointed out, have been falling as well.
Hit hard.
Yeah, hit hard. But they're still bordering at 50. I'm thinking they're not gone below 50, but yes, there's a concern on that.
Exactly.
So how much more downside?
I think the momentum is certainly, it's more bearish than bullish. And from, try and get that, I think the first point is Chinese stock market needs to see a recovery, and it needs to be up, 10 or 15% from these sort of numbers, 20%. And I don't know whether you're going to see that in 19. I really don't think it will happen. And that again comes down to what happens with the G20. If there is no deal done, then I think you're going to see a sell-off as far as Chinese equities, and that will take, and there'll be a downdraft to the base metal market. They'll go in tandem. They're in lockstep in a lot of ways. You've seen that collapse across those equity markets and as far as base metals, and they're the largest consumer. Watch what happens as far as agriculture. The impact is going to be big. 18 was a volatile year. You lay it out on a graph. 19 is going to make 18 look like it was asleep. I really think so. I do. I think there's so many moving parts.
Okay, we have that on record from you.
Please.
Great having you. We could go on discussing commodities and what's going to happen.
Among everybody else. And we spoke to Ray Dalio, Howard Marks, right? They're all being cautious about 2019. Aisha?
Well,
and I listen to these guys. I listen to them. They listen to everyone, and the momentum at the moment is to the downside. We've never experienced this free money for so long, and it's going to be a wake-up call. Time and there's in some ways it's a perfect storm brewing.
On that note,
thank you, ladies.
Very quick break. Thanks so much for taking the time and speaking with us.